Good evening, everyone, and welcome to this, our second now event in our networking and note-taking NZBusiness events. These are quarterly events hosted alongside Icehouse, which will explore various topics relating to small to medium-sized businesses. They tie in with our quarterly digital publication, NZBusiness, and just various topics that will help SME owners on their journey through business. So this next one is about cash flow and investment. I know cash flow is a big challenge for a lot of businesses out there, which we'll hear a lot more about now when we talk about it in the panel discussion, so I'm not going to say too much now. I'll hand over to Olivia just to say a few words of welcome, and then we'll get going.
Thanks, David. Kia ora, everyone. My name's Olivia. I'm the CEO of Icehouse, and it's wonderful to have you all here tonight at our home. A few of you didn't know who we were, so I can't let an opportunity escape me. So the Icehouse was established 23 years ago. We're a non-profit organisation that was established as a joint initiative between the University of Auckland Business School and industry, in recognition that owners of small to medium-sized businesses didn't want to sit in a classroom and learn in a typical way. So we run leadership and management capability services for owner-managers and their team, as well as coaching and advisory services. We also run a co-working space, which is part of where you are, and we do have some vacancy right now, so if anyone's interested, we have hot desks and permanent desks available. If you're a business owner turning over more than $3 million, our flagship owner-manager program, which I did 12 years ago as a business owner, and can confirm is bloody awesome. We're running a really sharp deal on that at the moment that comes with 10 hours of free coaching. To get through the next few months, take action. I'm not buying into this survive till 25 thing. I'm more interested in being positive, planning, and then take action in 25 and we'll thrive. So David Thompson is our regional lead. David, I'm going to make you do a wave. He works with business owners like all of you all around Auckland and can help you out. But anyway, as part of travelling the country, talking to SME business owners, cash right now, biggest challenge people are facing. So really delighted to have some experts here that can share some tips and tricks. Welcome. Thank you.
Cool, welcome. Thanks, panelists, for joining us this evening. We've had a drop-off. Dave Anderson is not well, so he won't be with us this evening. Yeah, thanks, guys, for joining us. Interesting topic, lots to get around this evening, so we won't delay and get into it. I know I was chatting to Rudy earlier just about some of the numbers that have come out of New Zealand in terms of the economy, the Fed dropping their rates. Perhaps let's just talk about that to set the scene in terms of the economy, what it looks like at the moment, and where we think we're going in the next 12 to 18 months.
Cool. Does that work?
Yeah.
Awesome. That's brilliant. It's automatic. Thank you for the applause at the front. That's awesome. G'day, Rudy here from Kiwibank. Yeah, it's an interesting time, I suppose. If we go back to 2020, COVID, essentially what we did was we pumped a whole lot of money into a whole lot of economies and lowered interest rates, and we caused a whole lot of inflation. And it's been challenging, and now that inflation is coming down, so I think central banks are grappling with what do we do with interest rates in terms of when it's coming down, how do we accommodate the loss in unemployment, but also make sure that it's still productive. So Fed's obviously cut 50 basis points, which is probably more than the market sort of expected. A lot of countries are cutting interest rates. New Zealand was one at 25 bips. So it is an interesting dynamic. The positive is that all central banks are cutting at the same time, because if that doesn't happen, there's a huge chaos that happens in sort of FX markets. So that's positive. But typically what happens is, at least in the United States, if you look at the last 3 times, when there's a cut, there's a recession the following year. So what we've got to figure out is whether are we going into a hard recession time, or is this concept of soft landing, which is basically we'll get inflation under control, that will eventuate. So I think New Zealand data came out today. It wasn't as bad as forecasted, but hey, it's not good. People are not feeling very rosy. So that's not a very good time to start off with. We are optimistic, but hopefully that kind of answers your question a little bit.
Yeah, perfect. Thank you. So obviously a challenging number of months still to come, obviously, until businesses start to see the effects of the drop in rates and things like that. Crystal from Tax Traders, in terms of cash flow, which is a big challenge, we've seen quite a few polls come out recently from various quarters saying that business owners are saying cash flow issues are a big challenge for them. What are you hearing from the clients that you're working with on the ground?
Kia ora everybody, I'm Crystal from Tax Traders. So we were actively in market up to the lead to Provisional Tax 1, so 28th of August. Predominantly we are direct to accountants, and accountants obviously to their clients. So we were really interested when talking to accountants about what they were going to be telling their clients to pay for 28th of August. Historically, they would just tell them to pay what the IRD is expecting. And at P1, or 28th of August, generally that will be 2 years prior RIT, so what you earned 2 years prior, plus 10%. Now, the biggest concern in the room was that nobody, or hardly, any of their clients were going to have that performance that they had 2 years prior, let alone the uplift of 10%. So accountants were having to be a lot more proactive with their clients in determining what they should have been paying for their provisional tax 1. So there was a lot more work, and David, you would have seen that yourself, in communicating with clients about their cash flow and how they were going to manage that, because accountants, as much as their clients would like to think, do not have crystal balls just underneath their desk. They can have a peek into Xero to see how your performance is year to date compared to previous years, but there's no way that 9 months out from balance date that they're going to be able to have a visual on what actual performance is going to be. So there was definitely a lot of nervousness there about cash flow for paying provisional tax 1 at 28th of August.
And David from KPMG, what are the sentiments from your clients that you're working with at the moment?
Yeah, so I think, hi everybody, David from KPMG Private Enterprise. So very similar to what Crystal said, we've come off the back of obviously the family trust tax rates changed, so a lot of activity might have happened on that front in terms of dividends and squaring away, so obviously some potential cash impacts there, and then trying to work out where we pay the tax and making sure we file the right returns so we trigger that, so that's been a big issue. I think other things that we've seen is just coming off the back of the COVID period in terms of clients working through a lot of inventory and particularly overstocking, so where they would have geared up a lot during the COVID period, and that's been passed on to their customers. With the economic environment, obviously those sales haven't transpired for their customers, which means there's just a backlog in the system. So a lot of that is coming through, which is just sort of snarling up cash flow for everybody. It's sort of subduing sales as well, which is just a bit of a cyclical thing for the whole supply chain. So a real challenge, yeah.
And that slowdown in spending is obviously a big driver in terms of what's causing these cash flow concerns for businesses. But there are other things that are causing cash flow issues. Maybe let's talk to some of those and some of the challenges you're seeing. I don't know if you've got any stats that you can share with us. Rudy, I don't know, that speak to some of the other challenges that are confronting business owners when it comes to cash flow.
Put me on the spot there around statistics. I think the other challenge really is, if you look at it from 2020, it was a working capital challenge primarily, to your point. Supply chains were disrupted. Then it became, I can't find any staff, where have people gone? And then now it's become, well, I can't find any revenue, but I probably have okay people around me. So I think what's causing further issues is probably the expense line is much greater than it was previously, so your margins are much lower. You've got sales in a lot of industries that are impacted. Now, there's outliers in every industry, and I'm saying sort of outside retail and hospitality, you've got manufacturing, construction, all sorts of things that are sort of accumulating. So other than that, I think there's a little bit of working capital pressure as well. So debtors are paying a little bit slower, creditors expecting payment a little bit quicker. If you've got inventory and you can't sell it, all your profit's tied up there. So there's quite a number of things that are sort of happening in the ecosystem, and I think that's why it's really important for businesses to kind of get aware of their cash flow and what it means for their business.
Yeah, Crystal, any thoughts from you in terms of that?
Yeah, and as David said, it's a supply chain thing, and it can come unexpected. So, good example, you might be a supplier to the hospitality industry. You could be a butcher or a food service, and they are generally neglected when it comes to hospitality paying their creditors. Generally, the last on the list. They will pay their staff, their PAYE, maybe. They will pay their preferred suppliers, their landlord. But when hospitality is impacted, they get cash in the hand. They make a sale. They get the money in their hand. They don't have, nobody really owes them money. So they've got the cash, but they're not passing that cash on as they should. So real supply chain. And if you're at the bottom, you are going to be last to be paid. And that is really impacting a lot of those smaller businesses where they are at the bottom of the supply chain. They're not barking loud enough. They're not getting out there and collecting their money. And that's really impacting a lot of those smaller businesses.
And what about, obviously, cost of living challenges for employees and rising costs for them and the need to get more money from their employers? How much of an impact is that having, and how are businesses handling that in terms of a longer-term outlook?
Yeah, I mean, it just speaks to I think it's almost the perfect storm for businesses at the moment. Sales are subdued. The costs of everything have increased. We've gone through a period of high inflation, and that includes wages and the cost of living expectations from staff. Staff have also been hard to get, so they've had sort of good purchasing power in terms of their remuneration. So there's a squeeze from the top, there's a squeeze from the bottom, there's not much left in between. And I think also with, I guess, the cost of finance has also obviously increased post-COVID. So those things are all sort of really impacting what's left on the table for businesses to manage.
So I'm a business owner, thanks to the recessionary environment in part. I'm struggling with cash flow. What advice do you have for me? We'll start with you, Rudy, on the end, just in terms of better managing that cash flow over the next 12 or 18 months.
I think sort of what we see depends on the maturity, the size, the complexity of your business. So if you're a medium to large enterprise, I'm sure you've got infrastructure around cash flow projections and monthly tracking, daily tracking, et cetera, et cetera, et cetera. What we notice is even if you're a small to medium-sized business, sometimes just being aware of the bad news and not putting your head in the sand, I think, is really, really important. And knowing where you stand, and sometimes that doesn't happen, and that's a conversation that sort of advisors tend to have with customers around what is the current reality. So yes, you need financial governance. You need to track your cash flow. You need to account for the worst case scenario. Don't be overly optimistic. I'm saying this because I'm a banker. I'm pessimistic and I think the world's going to fall tomorrow. But don't listen to me. But I do think part of that is don't be afraid of facing the reality sometimes, because that's the only way you will get out of it. And there's a lot of people that are there to help, whether it's tax traders or whether there's banks, whether there's whatever.
Yeah, and to you, Crystal, and I suppose to add to that, how important is it to consult advisory services when it comes to this?
Oh, very important, but in the short term, 12 to 18 months, it's really important to look at your organic cash flow. So what can you have control of and get fast? So it is everything in your balance sheet. So what have you got sitting in inventory? How fast can I move that? Do I need a sale? Have I got excess assets? Should I consider leasing instead of purchasing? It is, I owe this person X amount of money. Can I negotiate new terms around paying that? And then can I get on the phone and just bark at people to pay me? Am I comfortable doing that, or could I outsource that? And a lot of the important stuff as well that people forget is, what are you doing when you're invoicing your time or your services or your products? Can you collect your cash faster? So have you got jobs in progress that just need a little finish and then you bill instantly? Bill now, don't wait until the end of the month. Get that cash in. That's really where people can focus. It's that organic cash flow. Really tighten up that balance sheet.
David, anything to add?
Yeah, I think, and it's similar themes really. So I think when cash flow is tight, time is your enemy. And so being prepared, having those forecasts, knowing intimately about your business, where the cash is coming from, how it churns, what your cycles are, it really does help you. I think with the more time you have, the more options you have, and they're sort of a lot easier. And I know bankers and IRD especially appreciate having advance notice, and it gives them more options and sort of the ability to help. If you have less time, the options are a lot less, and they are a lot more drastic as well. So I guess the thing is there, buy yourself time, make sure you understand your cash flow, your forecasting, understand the balance sheet, where you can get cash from, and how we get that back into the business.
And obviously, small business owners are time poor, cash poor. Tapping into advisory services is not always an option for a lot of businesses. What are some of the tools or applications or things like that business owners that can tap into to help them better manage their cash flow out, forecasting, etc.? Obviously, AI has brought in a whole lot of new software and tools available to people for free. Is there any that jump out at you that you could suggest to business owners?
Yeah, I think with all the cloud-based accounting solutions, so Xero being an example, there are obviously others, but there are a lot of tools on there that are extremely low cost, be it reporting tools or help manage your debtors, collection. So really, we see those now as a hygiene factor. If you're not using one of those, then you should be, or you should at least be looking as to what you should be using. The reporting tools almost replicate what you have in Xero, so you've already done the hard work there. They create the reports, and they sort of show trends and sort of information in graphical ways, which really helps you as a business owner to quickly assimilate what you need to know, turn the lights on in the business, and really what you need to focus on. And also leveraging that gives an opportunity to use advisors as well a lot quicker, so maybe more cost efficiently for you. If you can give them a report and just say, what do you think? Then that's a much easier way to say, I don't know what to do. They've got to spend hours going into your data, understanding it, create the reports, etc. So look, it's a win-win situation. You sort of are pre-armed, pre-warned, and also cheaper support from your advisors as well. So definitely leverage those technology tools that are out there. Yeah, I think definitely for me it's a hygiene factor, and I'd expect people to be at least on their monthly understanding what's going on in the business there.
Crystal, anything to add from you?
Yeah, probably on the hygiene factor. If you are using things like Xero, these are real-time tools. So be in them, do your reconciliations, run the reports, and do it often. Don't wait till the end of the month. Do it on the day. You can do that because it is real-time and it is low cost. You can see in an instant how much people owe you, how much you owe, and how much is in your bank. So making sure that you are constantly, you're in there, you're understanding what is going on. The information is all there, so use it to your advantage.
David, you've been a virtual CFO to a lot of businesses in your career, helping them navigate challenges of economic downturns. What is your advice to business owners at this point in terms of navigating the next several months to not only survive, but as Olivia alluded to earlier, but hopefully grow into the next year?
So yes, I'm also not a fan of the survive to 25 terminology there. I think we need to get out of this funk and sort of get things going. But I think on a cash flow front, for me, there's really three sources where you can sort of drive cash flow improvement. First one is, how do I get more cash from my operating profit? And so that's either sales or cost reduction. So again, a real focus on that as a business. If you're not already doing that, what can I do to drive sales volume? As a discretionary spend in the business that I can cut out? And I guess the caveat there is don't compromise your future abilities though by cutting some of the easy things. So just be mindful of what you are and be deliberate about what you're choosing to change. The second one is then following those efforts, how do I get that cash back into the business a lot quicker? So a real focus around your debtors ledger. Am I getting paid on time? If I'm not, am I understanding why not? And what can I do to reach out to my customers? There are also digital tools that, again, align with some of these digital accounting systems that can help facilitate easy payment with invoices. So if you're not already looking at those sort of things, for example, send an invoice, click a button, and it sort of takes you to a credit card or a direct sort of payment instruction. There are costs with that, and the take-up seems to be a bit hit and miss at the moment, but I think that's definitely something for the future. So again, look at these tools and ways to sort of speed up payments from your customers, make it easy for them. Then
Make sure you pass on that surcharge, though.
That's right, that's right. So there is a cost with that, so go eyes wide open. The other side is, can I leverage more credit terms with my creditors? So can I pay them, am I maximising the credit that I've got with those suppliers? I don't need to renegotiate that. If you need more time, talk to them. There are sort of, everyone wants to get paid, right? So maybe they can be more flexible, you can agree payment terms. So these are sort of the tools that you need to negotiate. The theme there is talk to both sides, the customers and the suppliers. And then the last really option that you've got is, how do I restructure, or how do I add finance or sort of funding to the business, which is talking to the likes of Rudy at Kiwi Bank there, or other banking. How do I get sort of lending into the business? One thing that always surprises me is actually how flexible the banks are, and the range of products that they now offer. It is actually quite innovative. So do talk to them. You'd be surprised at what they can now do with all the various bits and pieces. And then the last bastion is talking to shareholders. Do I need to do a capital raise or talk to shareholders to get more funds in? So in a nutshell, be across all of those three areas. Those are the things that are going to see you through what you need to do, how you need to survive, or I think the better term is create a sort of a platform for growth, rationalize yourself, be in a position that you are going to take advantage of those opportunities when they do start coming back.
And talking about funds and fundraising, Rudy, Kiwi Bank's just launched Fast Capital. Do you want to talk to me a little bit about that? Who's it aimed at? What's it about?
Sure. Thanks, David, for calling banking innovative. I don't know if it's innovative. Appreciate that. So Fast Capital, it really is business owners are short on time, and they typically work all days of the hour. So Fast Capital is a technology solution. You go in, you upload your Xero, you get your financial statements in there, and it can automatically credit decision business loans up to $1 million. So the fundamental concept is that using technology, we can get faster access to capital in the hands of SMEs. We're not a very developed country when it comes to that. Like if you look at the UK, States, it's a lot more developed. So I think access to capital is really important, so we're trying to push that. But capital's one side. I think education about how to maximise that capital is really, really important, because if you get capital and waste it, it's good to know when it's not sort of moving NZ forward. So that's what we're trying to aim to do. One of the key sort of things that we're trying is that our approval rates, automatic approval rates, actually go up. So it's actual technology driving that, and not me running on a hamster wheel in the background with a fancy thing at the front. So that's what Fast Capital is.
And when it comes to accessing capital, how do banks assess small businesses on their cash flow when it comes to accessing this kind of capital?
Yeah, that's a good question. I think for anyone, and for banks especially, I think having comfort that the business owner or the company understands cash flow is really critical. And you'll be surprised, quite often good bankers look at balance sheet before they look at P&L. They're trying to understand what is happening in the balance sheet in terms of inventory movement, in terms of working capital movement, in terms of retentions, etc. Because that is ultimately what is going to get the thing going. So I think for banks, what's really important is knowing that the business owner understands cash flow, knowing that the business owner has governance around tracking cash flow. They understand seasonality, they understand days and months, etc., and the nuances in their business. And that gives a lot of comfort. I mean, there's a lot of times, even in businesses that turn over $50 million, you might get a cash flow forecast that shows sales flat month on month. And I haven't met any business that shows sales flat month on month. So then it comes down to the advisors and who they have internally, etc. So, yep.
And when it comes to relationships that business owners have with their banks and their banker, how can businesses make the most of those relationships? Because I think it's really important that business owners speak to their banks regularly in terms of what's going on with them in their business. How are you making it more accessible for business owners, and what advice do you have for business owners in terms of accessing that relationship with their banker?
I think it's kind of like, if I don't talk to my wife for 2 weeks, I think she'll be upset and we'll lose connection. Some more things might happen. So it's also on the bank's responsibility, right? So I think that human-to-human connection is really important. I work for Kiwi Bank. I used to work for ANZ for 12 years. There are good bankers in every organisation. So finding the banker that you connect with, that understands your business, is really important. Then regularly catching up with that banker and the banker catching up with you is really important. But then also having sort of more connections throughout the bank is also really important, because what happens if the banker sort of moves on? So I think just like any other strategic relationship you might have, and I'm not saying my wife is a strategic relationship, you've got to have that human-to-human connection and multiple touch points.
Cool, thank you. Crystal, coming to you, obviously different offering in terms of tax traders. You've got the new taxi platform. Tell us a bit about that and how you're helping businesses with tax.
Yeah, sure. I won't get into the intricacies of tax pooling. Is anybody here familiar with tax pooling? A few nods. Oh, great. Yes, you are. Thanks, Matt. So we built Taxi off our tax pooling framework. So Taxi is our working capital product. So essentially it uses your tax as security to be able to access funds. How they do this is because taxpayers, they can choose to use the tax pooling system, and they can deposit their tax into the tax pool rather than paying the inland revenue. So when you pay the inland revenue, that cash can sit with the inland revenue, unused or just sitting there idle for up to 18 months before you file your tax return and that liability is crystallised. So that cash is doing nothing for you. So when you deposit your tax into the tax pool, it sits there as security, where you can access up to 90% of that at a very low interest rate of 7.09%. So that allows you flexibility to reinvest your tax, make that tax work for you back into your business. So this is a really new product to market. It has been legislative since the day of time. Tax pooling was there, so it has been always available, but has only really been available to the big end of town. So the major corporates who are depositing millions into the tax pool have been able to access and do what we historically called reverse financing. So we've just made a product that is able to have an interface with small to medium enterprises and make sure that everybody has access to tax back where you can. You need access to extra working capital at about half the price of what an average overdraft might be.
And tax is obviously a challenge for a lot of businesses navigating tax. What are some of the pitfalls that they should be looking at when getting into this pooling?
I'm not just going to talk about income tax here, and that's generally what we dabble in. Tax is really important to your cash flow. You will pay your GST every second month. You will pay your PAYE when you file that, and that's regularly. That could be every second week, once a month. And then there's income tax. So income tax is really flexible because we have the tax pool. It is a prepayment of tax. That is why it is very flexible. GST, you collect GST. So you've already got the cash in. So that is expected to go straight back to the IRD. So, and then you have PAYE. Now, when you get to the point of not being able to pay your PAYE, the IRD, it's fine to put in a payment plan for GST, but when you get to PAYE and you're starting to do payment plans with the IRD for PAYE, that is when it's a good sign that you need to revise what you are doing with your business, because that can happen once, it can happen twice, but when you get to the third or fourth time you're starting to get into instalment plans for PAYE, you're starting to get, your business is in trouble. because PAYE is the first thing you should always pay when it comes to the inland revenue. And when it becomes the last thing you pay, then you're in a lot. You need to revise your business.
Obviously, cash flow issue associated with that is proper financial planning, looking ahead 18, 24 months, 3 years, 5 years. How do businesses get better at strategically planning or forecasting out? David, I'll throw it to you.
Yeah. So I think the only real thing that we know, or we're 100% certain about a forecast, is once you've finished it, it's wrong. And there lies the truth. So I think with a forecast, the nature is, look, you do your best to make sure it's right. You're sort of incorporating things that you know are going to happen in the near future. But the key thing is, let's create that feedback loop. So constantly checking it into actuals. How is my business actually performing? What am I seeing coming through the bank accounts? What is it showing me? And getting that intimate knowledge. That then sort of turns it into a really powerful management tool. I mean, I think, yeah, back to the crystal ball earlier on, it is a bit of that, so it's a bit of a thumb in the air, but if you get your core business forecasting correct, that gives you some confidence, and then you can start managing what's the flex, what do I have, how do I manage these sort of larger events or these shocks to the system that I then need to, again, buy time to start working with either the banks, the poolers, to try and manage how those things are going to come through. So I think it's very important to think about, yeah, what am I actually seeing? What do I know is going to happen in the business? And what are some of the actual cash treatments? The number of times I've seen people miss GST off a cash forecast is a bit shocking, and that's a bit of a nasty surprise. So watch out for that. And I think that's why that feedback loop is really important. It'll quickly highlight things that you've missed or don't know is happening in the business.
Yeah, and I'll just, on the back of forecasting and preparing forecasting, a lot of what you see is forecasts prepared for bank. And they don't take them necessarily serious for internal purposes. So they think, I've prepared this forecast for the bank, this is what the bank wants to see, this is my banking covenants. Thank you, Rudy and Kiwi Bank, here's my forecast. And then they forget that they've done this forecast, but that forecast is probably not fit for purpose for internal. So you really need to take that and actually put what is really relevant internally for your business. And like David said, you're testing that. So you're forecasting, it needs to be tested with actuals. So soon and fast you will learn that, hey, actually that assumption didn't work, I've got to change and I've got to reforecast. So it's constantly testing your forecasting. And you can get historical data, yes, but that's not what today is. So definitely continue to test those forecasts.
So I think just quickly, just the key thing that we be realistic, be optimistic, but be realistic. Otherwise, it's no use to anybody. And I think, again, just back to the earlier point, there are tools out there that automatically can create these things for you. So look, we love Excel, but you don't have to use Excel anymore. But
there are so many great plugins for Xero, but you'll see me on the back of a cash flow for an Excel any day. Like, accountants just can't change their stripes. Excel all the way.
We love those things. But look, it's easy to put a number into Excel. It's even harder to actually make it happen. So be realistic. That's the key thing about these things.
Rudy, what are banks looking for in terms of forecast?
Banks are looking for everything. I suppose, yeah, it's a really good point. Banks, I think most banks are not looking for a rosy forecast. The forecast is typically not there for us to tick a checkbox. I think it's there for us to structure covenants and understand where the customer's going. So most banks would probably want a forecast that's prudent, that's realistic. Yep, optimistic, because we have to be optimistic in business, but it has to be prudent and realistic as well. I think the other thing is using that forecast, obviously, understanding that forecast, understand the key things in a business, because you can't have 10 different things you're tracking, right? There's a couple of things, sales, staff, whatever it is, depending on the nature of the business. So if the bank has got confidence that the key KPIs are understood, the forecast is somewhat realistic, I think you can work with banks very, very well. But if you're forecasting a hockey stick growth and all the cash in the world, then and it doesn't get achieved, then I think it puts doubt on your credibility naturally. And there's no need for that. No, I don't think no human rational person is looking for that.
You obviously deal with a lot of businesses on the ground in Auckland. What is some of the sentiment that you're getting from them in terms of an outlook, in terms of cash flow and growth in the next 12 months? Maybe even if you've got like some stats by industry or anything like that that you could share?
Sure. I think it's been hard since 2020. It's really been hard. It's been a non-stop journey, and it's I think the saying now is that change is inevitable and it's just part of business. So I suppose, what are we seeing? We're seeing probably businesses thinking the worst is over. In terms of sales, they're seeing interest rates sort of come down. They're hoping for demand to pick up. There are certain industries that are still struggling quite a bit because they're fundamentally quite disrupted in terms of hospitality, for example. That's really struggling. But I think the general consensus is the worst is over. A year from now, things will look better than what it is now. That being said, it is still very, very tough. The margins are taking a hit. The cash flow is taking a hit. There's often fixed expenses, whether it's, if you're a small business owner, you've got a mortgage and the interest rate's gone up. If you're a medium to large size business, you might have debt and the interest rate's gone up. So for those customers, we're obviously, all banks, including us, we're talking about how do we restructure that debt to sort of make it more affordable if that's a big sort of expense line. So I think we're naturally very optimistic. Is New Zealand going to be a better place 10 years from now? The answer is probably yes. But we're going to have to struggle to get there. I think one of the things that we sort of worry about in the banks, and quite kind of counterintuitive, is stuff like GDP per capita. It's about education for our young ones. That sort of stuff, that social outcomes, is something we're really worried about sort of 10 years from now. We'll get through this.
And on the back of today's tough economic data that came out, Kiwi banks calling for aggressive, fast drops in rates. What does that look like in your view, and when are business owners going to see the effects of that?
Yeah, good question. I think the positive news is a lot of the mortgages are sort of fixed early, so that we don't have huge amounts of long-term fixed rate. So I think wholesale markets have dropped quite dramatically. They're predicting about another 150 basis points of OCR sort of cut by mid next year, if not more. So what we say is probably by middle or end of next year, if you see a mortgage rate with 4 in it, that's probably likely, and that's where it kind of probably needs to be. But yeah, sorry, I forgot the other part of your question. I was just getting excited about the 4% interest rate.
No, I think you asked it just in terms of when businesses can start to see the effects of it.
Yeah, I think businesses will start to see it. There will be a lag time. Like no one's. I'm not going and buying a car just because it's 25 basis points less. But 2 years from now, when my mortgage is 4%, my income's okay, my wife's happy, maybe I can buy a toy car. So I think there's still, it's going to come through, but I think confidence is infectious. And the way the economy is structured, we are a very confidence-driven economy. We're a very residential property-driven economy. So I think as house prices start to go up, as confidence starts to go up, I think humans will make decisions. And everyone's sort of sick and tired of sort of feeling gloomy all the time and all that kind of carry on. So I think demand is sort of building up.
And Crystal and David, in terms of confidence, what are you seeing from your clients that you work with in terms of that confidence going forward? What's their outlook? I don't know if you've got a specific case study that you want to reference or a client that has said this to you about what their outlook is that kind of sums things up.
I can start with that one. We've got a lot of people nervous about Christmas. Yes, I said it, Christmas. It is 3 months away. A lot of people nervous about over-ordering inventory, their working capital in the lead up for Christmas, and just what is Christmas going to bring. So if it doesn't bring it, then what that looks like for them in the new year is really what we have seen, especially when we've been out talking to those about our taxi product and how they can use that as a standby facility for working capital just in case they do need to urgently buy some new inventory. And that's a great example of one of the clients that did deposit with us, is that they were nervous they didn't know if they were going to have enough inventory or too much inventory. It's a really nervous point coming into Christmas.
Yeah, and I suppose that seasonal trade is another thing that we haven't touched on yet, and it does affect a lot of small businesses in terms of cash flow. Is there a different approach that you take in terms of cash flow management when it comes to those seasonal dips?
Yeah, and that can be any of the tax traders' products. So Taxi, it requires cash up front now, and then you draw down on that. And then there are other products such as buy and finance. So you can delay that until after Christmas, your tax payments, knowing that you can buy that tax back at an earlier date and have that flexibility, because you might not need that. If you've had a poor Christmas and you've paid your 28th of August to the Inland Revenue, it's really difficult to get that money back. So having that flexibility in using a tax pooling product, yes, it is a plug, but that is really how we can help with working capital, is that nervousness about those seasonable flurries. And when you've got the cash, then we can be really flexible with how you use that cash in paying your income tax.
David, anything to add?
Yeah, I think just a couple of some sentiment from some of the clients I've got. It is been a tough time. Some hard decisions have been made, and the sentiment is actually positive. So the order books are starting to come back with some of the larger manufacturers in New Zealand. They've worked through their historic inventory stock. They've got sort of global orders coming back in, and now the system is starting to churn again. So really encouraging to see that. And also, I think some of the infrastructure projects seem to see coming back online. The government might be spending again, and so I think there are sort of nuggets of sort of positivity out there. So it is not all doom and gloom. There is, I think, a bit of sort of rationalisation, see through, sort of wait for these interest rates to come down, the flow-on effect to come through in consumer spending. But there is sort of positivity out there.
And in terms of these green shoots that we're seeing, as businesses look ahead to growth, when it comes to growth strategies, what are some of the things that they should be looking at or employing when putting together growth strategies for their business? I know it's dependent on what businesses they have, but is there any thoughts that any of you can offer?
I think one of the things you mentioned was not cutting down the business too much, that you don't have the infrastructure of the staff, because that's IP that you built for a long time. I think if you're a working capital business, any business that's growing, you're going to need working capital. So planning ahead for that and making sure you can get that working capital. And I suppose learning from cycles. This is a cycle. I know it's painful for some, it's okay for others. But I think learning from cycles is really, really important, and viewing it as a cycle, viewing it not as a failure, but as a thing that we'll just go through. So those are kind of the key couple of things.
Yeah, there was a recent study of the last 3 major recessions, and they studied 4,700 companies. They studied the 3 years prior to a recession and then the 3 years post the recession. And those that really, really cut back, they cut everything, they went really super lean, they did not do as well as those that ramped it up. Those who reinvested, they kept their staff, they kept going, they pivoted, they were the ones that really thrived through the recessions and got the gains afterwards. So those 3 years after, they were the ones that really survived really well.
I think for me is if you've survived and you're ready for the growth, don't sort of throw it all away. It is how do you make the growth sustainable? And growth requires investment in working capital. So if my sales are outstripping my inventory, I've got to buy more inventory. So can I be clever around that? Can I get just in time? Can I sort of negotiate better sort of terms and credit terms, etc.? So be clever about the growth and have a definitive plan as to how you're going to achieve that in a sustainable way. We don't want to put you back into a stress situation, but it's hopefully you've come through it. You're more laser focused on managing your cash flow, knowing where it all comes through, and then you've got a sustainable plan as to how you can actually grow into the growth green shoots.
Well, perfect. And as we wrap up, any closing words of wisdom that you could offer business owners as they navigate the next several months? Anything that you had to add? Rudy?
Oh, that's a big one. That wasn't on your list, I don't think. Words of wisdom. I think for me it is as painful as it can get and as complex as it can get. It is a cycle, and things will get bad and things will get good. I think fundamentally, if you're burying your head in the sand, don't do that and reach out for help. I think one of the things that we're sort of seeing really is, you talk about IRD, don't ignore IRD. It's a preferential creditor, et cetera, and tell your banks about it, tell your advisors about it. No one wants to see business fail in New Zealand, I don't think. So the only limited word of wisdom I would have is, we'll be all right.
Crystal, anything to add?
What am I going to add to that? Yeah, working capital strength, and I guess back to the earlier point about really tightening up that balance sheet. The short-term gains that you can get by that will see you through enough. Lots of communication with the people that you work with, your staff, your creditors, the whole supply chain. A lot of communication can get you through.
Communication. David, anything?
I think just reach out early. There are people out there that can help and want to help. So buy that time, because time is critical. Be realistic and just be disciplined about it. And I think my closing statement would be, my favourite saying, well, not my favourite saying, but what I impart on all my young graduates is sort of, a business can make profit and losses, but you only ever run out of cash once. So that's why we are laser focused on cash and cash management.
Perfect. Thanks, guys. Thank you so much for coming through and joining us on this event. Any questions from the floor? I'll come up with the mic if anybody has got a question.